Let's talk some analyst tech notes, as that's going to be our focus for stock earnings this week. Renita Young joins us from the newsroom with a note from Morgan Stanley out on a couple key names. Adobe, the first one here, and it's a pretty positive note.
Oh, absolutely. So this analyst took this stock to overweight from equal weight and a price target of $660 from $510. That's about a 25% move to the upside from where it closed on Friday.
Wow.
Now, this analyst says that Adobe might have been late to the AI party, but now that it's finally given more clarity on its products, it could mean a comeback for the Creative Cloud organic growth. Now, this analyst says that Creative Cloud could push its earnings per share, the company's earnings per share, to a compounded annual growth rate of near 17% between 2022 and 2025. And this analyst acknowledges that Adobe is one of the strongest franchises in software, and this Creative Cloud, it's well positioned to be able to integrate generative AI's functionality into several things, the existing workflows of its customers right now. It'll be able to enable stickier customer engagement as well. And so far, this stock is still pretty strong this year. It's up more than 57% year to date, up more than 90% from that yearly intraday low. And this analyst obviously feels like it can go a little bit higher.
Man, this thing is moving already. So,
yeah.
Okay. Market is really liking it. And should be one that has some pretty easy AI adaptations to their product suite. Looking forward to seeing where that shows up in earnings, because it is seemingly low-hanging fruit in that category. Not a stretch of the imagination at all. Like literally, you don't even have to imagine anything anymore. You just press a button and it does all the Photoshop for you.
Exactly.
All right, now on the other side, there's actually something a little bit more negative for Salesforce, which when it comes to that category of cloud, pretty key commentary here.
Right, so it's kind of like a backhanded compliment, honestly, because Morgan Stanley, they downgraded this stock to equal weight from overweight, but raised the price target to $278 a share from $251. That's around a 23% move to the upside from where it closed on Friday. Now, this analyst says that those near-term catalysts, like margin expansion and price increases within the company, they're now priced into the shares, and that there's a longer path for this company to be able to actually realize its generative AI benefits. But to see shares rise, this analyst says that Salesforce needs to show more upside growth and needs to see an improvement in its core demand. But that will take time to reflect in the company's subscription model. However, Morgan Stanley is still confident in that longer-term opportunity for the company. Says that the share price, acknowledging it's still pretty strong, it's up about 70% year-to-date for Salesforce. So still strong. This analyst still believes, or still is bullish on the stock, at least according to the price target.
All right, so a little backhanded compliment. I think that's a good way to describe it. Needs to perform, it sounds like, maybe to kind of justify some of the expectations. Has been a nice comeback story. We've talked ServiceNow, which has done pretty well, so there's a whole group here that had been lagging the hardware side, but is now getting to showtime in this, as we move towards kind of the second half of earnings. Not quite yet. Salesforce still a little bit off in the future, but never too early to start thinking about it. Thanks, Renita. Appreciate it.
Of course.